dollars of it in exchange for a 40% stake in the potential Chrysler-Fiat partnership. They've also been critical of that partnership, so a lot of questions about this. Joining us to talk about the future of Chrysler is Wall Street Strategy CEO Charles Payne and the president and COO of West End Financial Advisors, Kevin Kramer. So, Charles, the Treasury clearly doesn't like this proposal coming from the hedge funds and the banks, saying it's not only not in the interest of Chrysler, it's not in the interest of the country. And that kind of call to duty is interesting.
Yeah, it is interesting.
In the world of business. How do you think that figures in?
Well, I think
what the government is doing?
I think it's interesting since we're serving up Chrysler on the platter to Fiat. No money down. Yeah, some technology or whatever. But to me, I understand where the bondholders are coming from, and they would like to get some sort of a listen. The way this is structured right now, Fiat will get a large chunk of this company right out the gate for no money down, and the option to buy the rest of it later on down the road. And the bondholders are looking at this and saying, we want a piece of the action.
Well, sure, but they're going to take a loss no matter what really happens. So why, Kevin, hold out and not actually look like you're working with the government on figuring out a solution here?
Well, this is a really high-stake game of chicken, and they're waiting to see who's going to blink here.
But who's to gain, really? And
well,
again, to Charles's point, is it only Fiat?
No, everybody wants to come out with as much as they can get, so nobody's going to concede until they're forced to. I mean, that's really the bottom line here. Either going to ultimately push this thing into bankruptcy, but short of that, people are going to still persist in getting as much as they can.
I think with this offer also, it seems like this pendulum on whether the government, the White House, has the will to force bankruptcy or not, continues to shift back and forth. A week ago, it seemed like the government was really willing to, and then word over the week, over the course of this week, has been that maybe they don't want to do the bankruptcy. And I think as this pendulum continues to swing back and forth, you're going to see, again, this game of high-stakes chicken continue because no one wants to blink. The unions don't want to blink, management doesn't want to blink, the bondholders don't want to blink, and the White House doesn't want to blink. This is a real tough game here.
Who do you think should blink first?
I think they all have to blink to a certain degree, and I think that's the unfortunate part. That's why bankruptcy...
There has to be one that starts the domino.
I think management, because insofar as that they're really in the pocket of the government at this point. So they're
so management first.
So management, the unions have to give. I think there's no doubt about it. And then I think once that happens, the bondholders will probably give up a little bit more.
Kevin,
but again, Fiat's getting a heck of a deal.
They are, Kevin. Really quick here. I know you look again. We'll bring it back to franchises. Do you think the core business here at Chrysler is actually worth this type of high stakes game of chicken, as you call it?
I do. I think they build good cars. I think they've been a part of the American presence for many, many decades, and I think they deserve another chance. So I'd like to see them get restructured in a way that allows them to achieve profitability and continue as an enterprise.
You own a Chrysler, Kevin?
I do not.
Charles,
no comment.
All right,
I'm tired of dissing Chrysler.
All right. Thank you, gentlemen, very much.
They make great-looking cars. Can't vouch for the engines.
Well, we'll leave it to opinion and everybody else. You can go ahead and you can Twitter with Charles about Chrysler, right, Cottle? I'm sure you follow Charles, don't you, on Twitter?
Oh, yeah, well, religiously, absolutely. You never miss CV Payne on the Twitter, no doubt. All right, thank you, guys. Appreciate that. It could be just one lemon, Charles. You give him a chance, right? The recap here of our top stories, including the Treasury Secretary Tim Geithner trying to calm Payne is with us. Kevin Kramer's been with us all morning long. That's an interesting story. What do you think of this? We'll just start with Pepsi bottling, as Jenna mentioned, with the earnings that are just out. But what do you think of the strategy Pepsi has? We talked about it earlier this week, right?
Yeah, and so they were in a rush to get rid of them. They spun Pepsi bottling off, and a lot of the bottlers in 1999. I think the businesses were just too slow growing, and that gives you an idea of the new corporate world we live in. Slow and steady, I think, is not as unattractive as it was just 10 years ago.
That's right. Times have changed. I mean, it makes some. Does it make sense, Kevin? I guess that's more of a question than a statement to try to buy these companies back.
I believe it does, and again, consistent, steady, positive revenue returns. There's nothing wrong with that.
By the way, they said they'll, I think, save $200 million in redundancies. I think that was the number.
What was that?
They might, the new merged companies could save up to $200 million.
Yeah, that's why you try to save money in this. So I was just going to pass along AirTran. We talked about Continental earlier, about AirTran's earnings just came in at 21 cents a share. It's way off from the estimate. The estimate was only 4 cents. So just so you know, AAI is the ticker on AirTran. Whether or not those numbers are comparable, the market will decide. The stock's not trading just yet, so there's no way to see how it's reacting, but it does expect to remain profitable every quarter during the year. So, hey, you get that out of that stock's actually done very well, right? Up 17% or so over that 1 year time frame. What about earnings in general here, Charles? We headed to another big day. What are you looking for? What are you looking at for the most?
The Morgan Stanley number, I think, is interesting. And what I find compelling about Morgan Stanley, no insider buys. Almost every financial had a slew of insider buying. I couldn't find any insider buys on Morgan Stanley. You know, for what it's worth, might not mean anything, but it's pretty odd that stands out as opposed to all of the rivals.
And why do you look at those insider buys again?
Well, certainly in this, the key thing right now is confidence. That's what everyone's trying to, you know, from the president down to corporate chieftains. Everyone's trying to get out a sense of confidence, because the one intangible for this economy to really turn around is how people feel. And it's interesting that when their stock was getting hammered, Morgan Stanley, their insiders weren't going in there to buy, to say, listen, we stand by the company, we believe it's oversold. Obviously, we saw a ton of buying with Citi, Bank of America, and others.
They watched Dave Ramsey on Thursday night, Town Hall for Hope, and maybe they'll get in there and buy the stock, have a little more optimism.
And cut their debt.
And cut their debt, cut up their credit. Well, yeah, that's the catch-22 for them. What about you, Kevin, heading into today? I mean, we have the banks in Wells Fargo and Morgan Stanley. Then we have some other companies like McDonald's. I mean, what do you think we'll learn about the economy today, if anything?
Again, we're in this sort of the first inning of a very long ball game here in terms of our recovery. It's important to note we're 17 months into this recession, the longest except for the start of the Great Depression in the 30s. And recovery in the market does not necessarily equate to recovery in the economy. So we, are remaining bearish. We're still counseling our clients to look at fixed income alternatives. And to the extent there is a bull market rally here, to sell into it and reallocate.
Bear market rally, yeah.
Yes.
So, right.
Really quick here, Charles. We only have about 30 seconds. You say on the top of your note today, no weak sisters, question mark, twisted sisters, maybe. What do you mean by that?
Did you see the market go up on Timothy Geithner's testimony? You got to be kidding me. This guy was gibbering, jabbering, avoiding the questions. For the market to rally on that, I watched it. I said, you know what? This market's going to go up. No matter what he said, and I tell you, he's perfected the art of wasting time. He figured out that these guys only have a certain amount of time. That was a fantastic question. I love your tie. Where'd you get that, Hermes? He's wasting so much time. He's mumbling, stumbling, and the market's rallying on that? Give me a break. He didn't answer one question.
He's talking again today. You're going to be listening?
I'm going to try to listen. I don't know. I mean, an interpreter with me, a Rosetta Stone or something.
Rosetta Stone. You knew that would work him up. You knew that.
Just wanted to finish on a good note.
Just leave him. Now he's going to be all worked up.
Yeah, now I'm all upset. Geithner. I don't know what the heck he said. It mumbles. The old Dick Tracy guy.